There's a third question which you might ask me, which is, will the Federal Reserve lower rates? Now, currently the most recent estimate I have is dated the year 2020. Today, February the 28th, 3:39 Eastern Time in the afternoon. And the likelihood for the FOMC, the Fed, after the FOMC meeting to announce a rate hike in their March meeting for a 25 basis points or 0.25% rate cut is 100%. So the market currently is blending in at least a quarter point rate cut. And there's a 94% probability of a 50 basis points, 0.5% rate cut, and a 6% probability of a 75 basis points rate cut. Hey, Peter, hello. I'm recording a segment in English because we're doing a Cantonese show in a moment. And the probability that the Fed would lower rates in their June meeting is currently at 68%. And the probability that the Fed would have a rate cut in November year 2020 is 52%. Now, the Federal Reserve discount rate is how much the U.S. Central Bank charges its member banks to borrow from its discount window to maintain the reserve requirement of individual banks. And currently that discount rate is 2.25%. What is the reason for lowering interest rates, you might ask me, because I personally do not feel that it's very effective. When I look at the formula for calculating the GDP, which is C plus I plus G plus X minus M, which is consumer consumption plus business investment plus government spending plus exports minus imports, I understand that lowering interest rates, the purpose is to stimulate business borrowing for new investment. But currently, the economy already has excess capacity. So if you are a business owner or if I am a business owner, it is highly unlikely that I would borrow additional new money from the bank to invest in new equipment or start a new business, because the existing businesses that I already have excess capacity. Most likely I've laid off some employees who hope to come back later when business picks up. So the likelihood that I would borrow new money from the bank, retail bank, to start a new business is very low. Therefore, the Fed lowering interest rates to stimulate the economy, I don't really believe in that reason right now. However, the Fed lowering rates is a signal that the government is willing to help. However, the actual action of lowering rates does not do much. So if that is the case, then what do you think I would recommend the US government to do, or maybe even my own Bank of Canada governor, currently still Stephen Polak, but he's expected to retire soon? I would again look at the GDP formula, C plus I plus G plus X minus M, and I would focus on the G factor, which is government spending on infrastructure to create jobs. However, be aware, using the example of China's central planning, you and I both know that there are many ghost cities of apartment buildings being built, shopping malls, which are completely empty because no people live there. But the reason is the central government, the Chinese central government, wanted to stimulate China's economy. So they put in a lot of money to build entire cities, which are now ghost cities. I do not believe that will happen in North America, in Canada, and in the US. But the government probably, if they want to stimulate the economies of both the US and Canada, would likely get more results by infrastructure spending. We are currently already spending quite a bit of money on railways and highways and roads. I recently heard that the subway line, the deadline and the budget the deadline is pushed further and the budget has been increased. So it'll take more time and it'll become more expensive to build the new subway lines. So I think it's a political move to stimulate or sustain employment, but that is just my conspiracy theory. But the fastest way is to prop up the stock market. So what the government can do is, or maybe the Federal Reserve specifically on the US side, is to buy back bonds from banks so that retail banks no longer hold bonds. The Fed has bought back those bonds and now the banks are holding cash. And the banks then have incentive to lend it to you and I. But I already told you and I, if we are business owners with excess capacity, we might not borrow from the bank to start any new businesses. Or if we are just regular folks, probably might not buy another investment property unless you know some really good deals. So what the US government could do is buy stocks directly from the market or use intermediaries like large pension funds or university endowment funds or mutual funds. And I was looking at the largest US pension public funds. Even though today is 2020, February the 28th, my numbers are for the fiscal year 2018. So apparently CalPERS, California Public Employees Retirement System, has $336 billion in their pension fund. Of course, they might be fully invested already, and in the last month, they might have suffered a big loss. But if they have cash available, they could actually help the US stock market by buying up shares on the cheap. And I've already given you 10 stocks, which I believe will go up the fastest. So CalPERS. Another one is CalSTRS, California State Teachers Retirement System, CalSTRS. They have $216 billion. And the third one would be New York State Common Retirement Fund. They have $201 billion. And for university endowment funds, Harvard has $39 billion, Yale has $29 billion, Stanford has $26 billion, Princeton has $25 billion, MIT has $16 billion, University of Pennsylvania, UPenn, has $13 billion. Now, of course, all those university endowment funds, their investment committees have their own mandates. They are probably already fully invested in the stock market, and they probably have suffered some losses the past month. But hopefully, if they have cash, then they could help prop up the US stock markets by buying some shares on the cheap. So these are the 3 questions that you most likely would ask me. And if you have forgotten what those 10 stocks are, let me repeat them for you again. Apple, AAPL, Amazon, AMZN, Alibaba, BABA, Baidu, BIDU, Facebook, FB, Google, there's 2 of them, GOOGL, Netflix, NFLX, NVIDIA, NVDA, Tesla, TSLA, Twitter, TWTR. So the time now is February, it's 9:57 p.m. and we're about to start our Cantonese show at 10 p.m. Eastern Time. Today is 2020, February the 28th. I am Jeff and see you in the next video.